China's informal Aussie thermal coal ban. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's have a look at this article from news.com.au, the huge cost of China's informal ban on Australian thermal coal. Now before we go through this, let's jump over here, and what I've got, this is Google Earth, and here we have the operating mines in Australia in 2014. That's the latest I could get from the Australian Mine Atlas, but this shows you all of our coal mines. Now a lot of them from New South Wales and Queensland export overseas. A lot of that heads to China. How much, you might ask? Well, if we have a look here, China imports about, 19 billion? And this is 2019, so it's probably gone up since then, of coal. Big chunk from Australia, big chunk from Indonesia, Mongolia, and Russia. Now they're trying to improve the ability to export from Mongolia. I've actually met Mongolians who came over here to Australia, and there was like a building boom over there. It was going crazy. Now, Australia, we export coal to Japan, India, and China is one of the big three where we're sending coal to. It's worth billions of dollars and just getting bigger and bigger. So it can have an impact, particularly on the royalty revenues of Queensland and New South Wales. And of course, that flows through to the rest of the country, everyone. So let's jump here and have a look at this article. So, China's unofficial ban of Australian coal resulted in the country's largest ever fall in thermal coal exports, a new report reveals. The latest update of the Resource and Energy Quarterly for March 2021 has noted the significant impact of China's actions on Australia, particularly on the price of thermal coal. Thermal coal is mainly used for electricity generation, in contrast to higher grade metallurgical coal, which is mostly used to make steel. China is the world's biggest buyer of thermal coal, consuming 20% of the world's exports, including 2.5 billion worth of coal exports from Australia last year. But import restrictions imposed by China on Australian coal last year saw a 15% decline year-on-year in exports for the September quarter 2020, which was the largest ever fall in exports. It also saw prices drop for Australia's coal. The report, prepared by Australia's Office of the Chief Economist, said export revenue recorded its largest fall for more than 30 years in 2020. The value of thermal coal exports are now expected to drop by $6 billion, from $21 billion in 2019-20 to $15 billion in 2021. The report highlights the pain that China can inflict on Australia's economy, as China announced yet another action against Australian wine, leading Australia to threaten to take it to the WTO. However, it noted the impact of China's informal import restrictions was not as significant as initially expected by markets, as countries had quickly adjusted. As China switched to buying cargoes from Indonesia, Russia, Colombia, South Africa, Canada, and the US, normally destined for other consuming nations in the region such as India, Japan, and South Korea, Australian exporters have filled the void, the report said. In fact, China's $2.5 billion trade with Australia last year was dwarfed by the $6.9 billion exported to Japan. South Korea took about $2.1 billion worth of Australian coal, Taiwan took $1.9, and India took $500 million. Despite the adjustments, there was an impact on prices. The bottom line for Australian coal exporters being that they are receiving lower premiums for their coal, the report stated. If this is sustained, it could raise broader questions around production levels at some of the higher cost coal mines. Now, what's interesting is the cost of coal, and what we'll do is I will let's just bring up trading economics, and we'll have a look at what coal is going for at the moment. Where do we have it? Do we have the difference between coking coal and coal? Come on. Here we've got coal, US per ton. Doesn't get into any finer detail on this website, but you can see it's down to $89. There, so it's down from 95. Now, back in 2011, when we were working on some coal mines, designing them and putting a lot of proposals in, the quality of the fit out in the mining camps was like a stellar level. It was crazy because of the price of coal, everyone. And then they suddenly got cheaper and cheaper and cheaper and cheaper, had to cut. You'd went from everyone having a large big room to double stacking dongers on top of each other to maximize your site or your population and minimize site work. So, and here we go. Here's Newcastle and JFC contract price. Conditions remain difficult. There are already signs of strain within the industry. Glencore announced plans last year to close 4 Australian mines by 2023 as their currently developed resource becomes exhausted. This could include the Liddell, Integra, Glendale, and potentially Newlands mines, representing about 4% of the country's thermal coal production. Conditions for Australian thermal coal producers remain difficult on balance, the report says. Overall, global thermal coal use fell sharply in 2020 due to the pandemic, which led to large falls in electricity use around the world. World thermal coal trade fell in 2020 for only the second time this century, the first being in 2015. Trade has also been affected by significant competition from gas. Over time, global coal imports are expected to decline in many regions. Despite a rise in the early part of 2020, Australia's thermal coal exports to China are expected to fall slightly from 230 million tonnes in 1920 to 206 million tonnes in 2021. However, exports are expected to grow over time, reaching 231 million tonnes by 25-26, as supply chains adjust and global markets increasingly prioritise high-quality coal. On balance, it is expected that Australian exports will grow slowly after a brief decline, though prices will remain constrained, the report said. Australia's products are still in high demand. There is good news in other sectors. In particular, Australia's iron ore sector is booming, and earnings in the industry set to record an all-time high in 2021. Earnings are expected to rise by 1/3 to $136 billion in 2021, after topping the $100 billion mark for the first time ever for any commodity in 2019-2020. Australia's exports of lithium, nickel and copper are also expected to surge thanks to growing opportunities linked to new and low-emission technologies. The minerals are central to these new technologies, with lithium exports expected to rise 5 times higher, while nickel exports are expected to double and copper exports are expected to increase by 1/3. Lithium exports are estimated to be $1 billion in 2020 and 2021. It's expected the surge in export earnings from copper, lithium, and nickel will replace the fall in thermal coal earnings arising from the transition to cleaner energy sources. Demand for higher-grade metallurgical coal used for steel is also expected to recover after the world trade fell around 13% in 2020. Australia's exports of metallurgical coal were expected to fall to 173 million tonnes in 2020 to 2021, largely due to China's informal restrictions on imports of Australian coal persisting into 2021. However, export earnings are expected to improve over the next 5 years as mines resume operations, newly formed supply chains strengthen, and demand grows in India, Europe, and South Asia. This recovery is expected to lift export volumes back to 191 million tonnes and export earnings up to 31 billion in real terms by 2026. Prices have already largely shifted by around 60% in January, effectively reversing the fall after China's informal restrictions were put in place in October 2020. Overall, Australia's resource and energy exports are expected to hit a record 296 billion in 2020 and 2021. The report describes this as a strong result in the context of the pandemic. A small decline to 288 billion is likely in 2021-22 before earnings stabilise for the next few years. The report said the outlook for Australia's mineral exports continue to improve as the world economy rebounds from the impact of the pandemic. Australian miners have found their product in high demand, helped by the impact of government and central bank measures abroad, it said. However, it warned there were risks if there were substantial delays in the successful rollout of effective COVID-19 vaccines to a large number of the world's working population, or there were further disruptions to Australia's resource and energy commodity trade with China. So there we have it, everyone. The impact of the informal bans on Australian thermal coal and metallurgical coal going into China. And it looks like while prices are down, other buyers are stepping in. As we see, while a lot of our exports go to China, not all of it is coal, and there are other opportunities out there. So maybe this could be a good thing in the long run. Our nation will diversify the other nations that we're dependent upon, which is what we need. And that will reduce the political leverage that China's CCP can place on Australian politics and leaders. Hopefully. What do you reckon? As always, thank you for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan and enjoy the content I find and put together here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. Take care, guys. Have a great day, and I'll see you next time.